Now, step 1 and step 2 in efica does that automated risk rating for you. So what you do is you start capturing your client. If you have an internal reference number, you put it in there. You start putting the client's first name, last name. Now you will see that there's some questions here. Did an accountable institution figure the client, or was the client met face to face? And you find the answer under this drop-down box. Now, because we've already screened Melissa through the system, for audit reasons, once a screening has been completed, as this one has been completed, I can no longer open these drop-down boxes, and that is to stop anyone tampering with this information. You don't want someone starting to do a screening and they don't like the return data, so they then go back and they change the information to something more friendly. So here's another question. Is the client a SA or permanent resident? Yes or no? Their domicilium. Obviously, if Melissa came from a high-risk jurisdiction, somewhere like Afghanistan, it's going to push up the risk rating up exponentially. Then you have your employment details. Under the section, you choose salaried, self-employed, retired, student, unemployed, whatever the person's legal employment status may be. And then it opens up the employment industry of the client. Now, what we've done under this section, we've only listed what the FIC deemed to be high-risk occupations. And there's a whole list of them. So things like mining, crypto, dealing in arms, manufacturing, fertilizer, and I know the petroleum industry is also deemed to be a high-risk industry. So if your client is not in a high-risk industry, you select other, and you type in the client occupation. Melissa's a lawyer, so she's put in legal. The employment industry, she's selected finance, although she's misspelled it, I see. And then she's put in the employer name of the client. Then you capture your client transaction details. Is it linked to a proposed Forex transaction, yes or no? Type of transaction, this is one out of the legal space, but rental and sale of properties are also under here. Then you have your transaction frequency. Now, I know some of you, being in the real estate industry, some of you will be orientated towards sales and rentals, others just rentals. So the difference between a multiple and a single transaction is a refica date. If you've got an ongoing business relationship with a client, it's a multiple transaction. If you do a sale of a property, it's a single transaction. You get the OTP, you send it to the conveyancing attorney, the property registers, and the client is out of your life. So the multiple transactions are going to have a refica date attached to them, which normally will be at the end of the lease term that you've got to rescreen the client. Then you have your source of funding and your source of wealth, which are very common terms in the world of FICA. You've got to understand where the person's funds come from and where does his general wealth come from. These two things create a lot of confusion. Obviously, you need to refer to compliance office for that, because sometimes they can be the same thing. They can both be from income from employment. Then we have a POPI declaration on the bottom here, and you'll be very glad to know that we actually provide you with forms for individuals, entities, CCs, and trusts that have got all this data you need to obtain from the client, and it's got a POPI declaration, and we provide it to you in Word format so you can copy and paste what you need out of those documents and make it part of your own process. Now I'll go continue. You will see that this is in step 2. This is where all the screening happens. It is screen Melissa against the FIC targeted financial sanctions list and the UN list. We in fact screen against about 20 pages of sanctions lists. We had a bit of an argy-bargy with the FIC about 8 months ago. They insisted that the states that it's the FIC targeted financial sanction and UN list, although we proved to them that we were screening those lists as well. So just to satisfy them, we expanded this explanation. It looks for PEP and close associates, and it looks for adverse media, particular to anti-money laundering. Now, obviously, Melissa's not a criminal. She doesn't have results, but I'd like to show you what it looks like when you do have results. And this fellow, most of you will know. Okay, this is our friend Atul Gupta, who's got most of our tax money in his pocket. You will see it will return a photograph of the person. It then gives you all the categories that the person's been triggered in all the various lists. You also see that some of these things are repeated. That's because it's coming out of multiple lists. But he's politically exposed. He's a special interest person. He's on the sanctions list. He's been involved in financial crime. And you'll see that he's been involved in bribery, corruption, and he's a disqualified director. It will then give you further detail of the client. And then under this section here, it actually lists all their individual associates. So these are all people associated with Gupta. If your transaction comes through one of these people's names, the system is also going to make them high risk, and it's going to indicate to you how they are related to Gupta. Then the section at the bottom here, these are all the linked entities, all the companies that Gupta's linked to. So again, it's going to give you the name of the company, and it's going to tell you what role he has in that business. And then I just want to touch on this thing here, adverse media. This is so important. And this is what's lacking in a lot of these systems. Most people are not bad enough to be listed on the sanctions list. We often pick up people that there are little newspaper articles that the chap's been in court because he committed fraud somewhere. So this is very important in terms of informing you on your due diligence that this person may have been involved in money laundering. These are all articles. If you click on any one of these articles, you will see it actually opens a particular article up, and you can go and read what the client has been up to. And obviously that's very helpful in determining who you're dealing with. Just going back to Melissa. Just one thing I want to point out to you, this external client consumer detail verification, this is not FICA related. Some of this data we are pulling from the credit bureaus. So this we just pushed you for general information. Sometimes some of this data has changed. It's not always accurate because it depends when last the person actually did a credit application, but it's not FICA related. This section, however, is FICA related. You will see Melissa's ID has been validated on Home Affairs, which is a requirement for the FICA Act, and a residential address has been independently electronically verified. Then you'll see that there are two questions here. I said previously, you can see in your organization, you did the screening. We want people to force people to, particularly your staff, if you're running big businesses, we want them to force and acknowledge that they've actually read the return data and there is nothing to be concerned about. So these are two declarations that there's nothing to be concerned about. We then go continue. Now this is your documents page. This is an extremely helpful page, particularly for people that don't know, mainly will be your staff that don't understand the FICA Act. This page is going to help them know what they need to get. Melissa is low risk, so the system is prompting you to load an ID and a copy of a proof of address. Had she been high risk, then this section over here also gets colorful. It's going to prompt you to load proof of source of funds. And typically that will be a bank statement. Where's this money coming? Then if they are politically exposed, then you have to also load proof of source of wealth. A lot of people really struggle with those two concepts. But let's say our president, Cyril Ramaphosa, is renting a property from you. The source of funds would be his bank statement, source of wealth. Where did you get the money, Mr. President? And that would be a salary slip. Or if it's a sale of a property and it's a substantial amount of money, perhaps he sold his shares in McDonald's, you ask for a proof of the sale of unit, you load it up here. The additional information there, you can technically use that for whatever you wish. A lot of our firms are using it when your ID does not time up with the client's name that they're giving you. Possibly it's a lady that recently got married and you can load a marriage certificate. And for those of you that are dealing with the commercial banks, they sometimes insist on a valid visa permit for foreign temporary residents that you load up over there. Then I go to continue. This is your general client onboarding decision. Is there anything suspicious or unusual to note, or is any additional verification recommended? Okay, this page deals mainly with client behavior. A client may pass the test as in Sean's example, but you're concerned. Something is not right here. So this is where you need to be vigilant and decide whether you need to ventilate this thing some more and report it to the FIC. We recently had an example out of Hike Bay where an attorney was doing a transfer. The lady was a Nigerian woman. She came out as high risk, and she indicated on step one that her source of funds was from inheritance. And when he asked for documentary evidence of it, she changed her tune and said, it's in fact a loan from my husband. Now that, in terms of the FIC Act, is suspicious behavior. You need to report that. So in that instance, you would have said yes, and then another block opens up here where you can write full narration of what's transpired. Then you'll see there's another question. Is the proposed transaction consistent with our knowledge of the client? Let's say you have someone that is a school janitor and they are leasing a penthouse apartment somewhere in the country for 60,000 Rand a month. Obviously, those two things don't tie up. You need to ventilate where they get the funds from to do that, and you can add any additional information over here. And you have your client onboarding decision: approve, decline, or refer. As I said in the beginning, we've got two levels of authority: users and admins. If the person's a user, they cannot approve a high-risk client. So what happens here is all the administrators, all the senior people in the businesses, their emails are under here. So the user will select who they're referring the case to. They click on that email address, they press refer. That person then gets a system-generated email off efica to say there's a client you need to review. It has a link attached to it. You click on the link, and then that administrator reads all the return results, and they make the onboarding decision, and they write in their comments here as to why they're happy to carry on with the transaction, or in Sean's example, they would have to decline their transaction and write in the comments why they've done so. Just something I missed here, you'll see that there's a date here. This is normally a calendar. In terms of your RMCP that Melanie probably drafted for you, there'll be a refica date. So if it's a multiple transaction, that's where you select your date. And when I go continue, you'll see here is your FIC report. So everything we've done up to now is reduced into this report. So if the FIC walk in and they want the information, you hand them this report. You'll note that you can download this PDF and you can print it as well. Then just going back to the dashboard, if you now come to your refica date and you now need to refica the client, we've got this functionality in here, so you don't have to now go and capture the whole client all over again. Would you like to clone this application? I'm not going to say yes, but if you do say yes, it will create another entry. But then all the fields are now editable. If the person's address has changed or something has changed, you can then delete what's in there and you can put the correct information and then put him through the screening process again. You'll see, and I know they've done it under my name, you'll see this little arrow on the left here. You'll see that push me through the system 4 times. So if you have a high-risk client and they're with you year in, year out, and you're rescreening them every year, and the FIC walk in under this little arrow, you can show them. I screen them year 1, year 2, year 3, and year 4. So that is the individuals. Sean, I don't know if you want to take questions on individuals at this juncture, or should we wait till then?
I think we must be telepathically connected, Peter, because I was just thinking I'd give you a little bit of a breather and pose a few questions to you.